Good day, investors. Nvidia just reported another absolutely massive quarter. Revenue growth was massive, data center growth remained extremely strong, profit margins surged, and free cash flow hit record levels. So in this video, we'll break down the earnings. Then we'll look at the biggest growth drivers for the company. After that, we'll take a look at the valuation. And finally, I'll give you my personal take on whether Nvidia stock looks like a good buying opportunity right now. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. Now if we start with revenues, we can see that Nvidia delivered another strong quarter. Revenue came in at $81.6 billion, compared to $44.1 billion during the same quarter last year, which represents massive 85% year-over-year growth. Management also highlighted strong growth across a very diversified customer base, including hyperscalers, AI model builders, AI cloud providers, enterprise customers, and sovereign AI projects. Nvidia also stated that Blackwell has now been adopted by every major hyperscaler, every major cloud provider, and every major model builder, which further strengthens Nvidia's leadership position in the AI infrastructure market. Management also highlighted that agentic AI and reinforcement learning are becoming new growth opportunities going forward. And Nvidia says its AI infrastructure currently delivers some of the lowest token costs and highest throughput in the industry. So overall, this quarter clearly showed that AI demand still remains extremely strong globally right now. Now taking a closer look at the data center business. This continues being the main growth engine for Nvidia right now. Nvidia also separated the business into two major categories, hyperscale and ACIE, which stands for AI clouds, industrial, and enterprise. Hyperscale revenue increased from $17.6 billion to $37.9 billion, while ACIE revenue increased from $21.5 billion to $37.4 billion, which again shows extremely strong global demand for AI infrastructure. Nvidia also continues seeing expanding opportunities across enterprise AI, sovereign AI, and industrial AI factories. Management also highlighted continued strong demand for the Blackwell architecture. So overall, we can clearly see that Nvidia's data center business continues seeing explosive growth going forward. Now, another major highlight from this quarter was profitability, because Nvidia's margins remain absolutely incredible. GAAP gross margins increased from 60.5% to 74.9%, while non-GAAP gross margins increased from 60.8% to 75%, which is an extremely high margin level, especially for a company operating at Nvidia's scale. Management said part of the improvement came from lower inventory provisions compared to last year. But overall, this also shows very strong operating leverage as revenue continues growing rapidly. And moving on to earnings per share, where we can see that Nvidia also delivered extremely strong profitability growth this quarter. GAAP earnings per share increased from 76 cents to $2.39 year over year, while non-GAAP earnings per share increased from 78 cents to $1.87, which again shows very strong operating leverage as revenue continues growing exponentially. Nvidia is essentially converting a massive portion of its AI revenue growth directly into earnings growth. And moving on to cash generation, where we can see that Nvidia also delivered extremely strong free cash flow growth this quarter. Free cash flow increased from $26.1 billion to $48.6 billion year over year, which again shows how profitable Nvidia's AI infrastructure business has become. At the same time, Nvidia returned around $20 billion to shareholders through dividends and share repurchases. Management also announced a new $80 billion share repurchase authorization, and Nvidia increased its quarterly dividend from 1 cent to 25 cents per share. So overall, Nvidia continues generating enormous amounts of cash while also returning significant capital back to shareholders. And moving on to expenses, we can see that Nvidia continues heavily investing into future growth opportunities. GAAP operating expenses increased from $5 billion to $7.6 billion year over year, while non-GAAP operating expenses increased from $5 billion to $7.4 billion, which mainly reflects continued investments into AI infrastructure, research, and next-generation product development. Management specifically highlighted investments toward the multitude of growth opportunities ahead, and this really shows that Nvidia continues aggressively investing to strengthen its long-term leadership position. And when looking at the outlook for the next quarter, we can see that Nvidia continues expecting very strong growth going forward. Management guided Q2 revenue to approximately $91 billion, plus or minus 2%, which again is an extremely strong number and shows that AI infrastructure demand still remains very strong. Nvidia also expects gross margins to remain around 75%, while operating expenses are expected to increase to around $8.3 billion, which again reflects continued investments into future AI growth opportunities. Management also noted that this outlook does not assume any data center compute revenue coming from China. So despite geopolitical headwinds, Nvidia still continues expecting very strong growth momentum going forward. So after looking at the earnings figures, it's important to also understand what is actually driving Nvidia's long-term growth right now. Because this is no longer just a gaming GPU company, Nvidia is now positioning itself as the core infrastructure provider for the entire AI economy. And I think there are several major growth drivers investors should really pay attention to here. One of the biggest long-term growth drivers investors should pay attention to is Nvidia's AI factory opportunity. Because according to management, Nvidia now sees at least $1 trillion of AI infrastructure demand visibility through 2027, compared to roughly $500 billion that the company discussed just 1 year ago, which shows how rapidly AI infrastructure spending continues accelerating globally. Management specifically highlighted demand coming from hyperscalers, AI model builders, sovereign AI projects, enterprise AI, and industrial AI factories. Nvidia also stated that this outlook currently only reflects Blackwell and Rubin systems, which means the company still sees a very long runway for future growth beyond this. And one of the most important takeaways here is that Nvidia believes we are still only in the very early stages of the global AI factory build-out. So Nvidia's long-term AI infrastructure opportunity could become absolutely enormous over the next several years. And when we go a bit further into Nvidia's long-term AI opportunity, management explained that AI factories are essentially becoming token factories, meaning the companies that can generate AI tokens most efficiently could potentially generate the highest long-term revenue. Nvidia specifically highlighted that its systems currently deliver the lowest cost per token in the industry. So Nvidia is no longer just competing on raw chip performance. The company is now competing on total AI factory efficiency, cost per token, and long-term AI economics. Management also emphasized that Blackwell already delivers major improvements versus Hopper, while Rubin is expected to deliver another massive leap in performance and throughput, which becomes increasingly important as AI agents, reasoning models, and enterprise AI applications continue scaling globally. And another long-term growth opportunity for Nvidia right now is autonomous driving and robotics. Because Nvidia continues expanding beyond traditional AI data centers, management highlighted that Uber and Nvidia now plan robotaxi rollouts across 28 cities starting next year. Powered by Nvidia Drive autonomous vehicle infrastructure, which shows that autonomous transportation is starting moving from pilot programs toward real-world commercial deployment. And if autonomous driving adoption continues accelerating globally, this could eventually become another massive long-term growth opportunity for Nvidia outside of traditional AI infrastructure. And when we look at the company's positioning within the AI industry, we can see that Nvidia has built an absolutely massive ecosystem around its AI infrastructure platform. The company now has partnerships across enterprise software, cybersecurity, cloud computing, industrial automation, financial services, healthcare, and AI model development. Companies like Palantir, ServiceNow, Cisco, Salesforce, and many others are now building directly on Nvidia's AI ecosystem, which creates a very powerful network effect around Nvidia's hardware, software, and CUDA platform. And this ecosystem advantage is one of the biggest reasons why Nvidia continues strengthening its leadership position across the global AI market right now. So after looking at the earnings and growth drivers for the company, let's now take a look at what analysts currently expect for Nvidia stock going forward. According to stock analysis data, Nvidia still has a strong buy rating from analysts, with an average price target of around $276 per share, which implies roughly 24% upside from current levels. At the same time, some analysts have price targets as high as $380 per share, which would imply more than 70% upside from current levels, indicating that many analysts still see significant long-term upside potential for Nvidia as AI demand continues growing rapidly worldwide. And when looking at the stock performance, Nvidia stock is currently trading around $223 per share, giving the company a massive market cap of around $5.4 trillion. The stock has also performed extremely well over the past several years, rising nearly 1,500% over the past 5 years, driven largely by the global AI boom. At the same time, Nvidia currently trades at around 45 times earnings and around 26 times forward earnings, which is still a premium valuation, but considering Nvidia's extremely strong growth, profitability, and leadership position in AI infrastructure, many investors still believe the valuation remains justified going forward. So when we bring everything together, Nvidia delivered another absolutely massive quarter. Revenue reached a record $82 billion, while data center revenue surged to $75 billion. Management also said Blackwell is now the fastest product ramp in company history. One of the biggest themes from this quarter is that AI infrastructure demand continues accelerating extremely fast globally. Nvidia says agentic AI demand is now growing rapidly, while companies continue racing to build massive AI factories. Management also believes AI infrastructure spending could eventually reach $3 trillion to $4 trillion annually by the end of the decade. Nvidia also highlighted several major long-term growth drivers including Blackwell, Vera Rubin, sovereign AI, AI cloud infrastructure, and physical AI and robotics. So overall, in my opinion, this was another extremely bullish quarter for Nvidia. The company continues dominating the global AI infrastructure market, and while the valuation still remains expensive, I personally think the forward PE ratio could continue coming down over time as earnings continue growing massively, especially because AI demand still appears to be accelerating globally right now. So I think Nvidia stock still looks like a buy at these levels, as the company continues strengthening its leadership position at the center of the global AI boom. And if AI infrastructure demand keeps accelerating over the next several years, Nvidia could still have significant long-term upside potential ahead. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching and happy investing.